when the market's confused. Steve strolls in with a chart and some probable news. Troy fires up Omega like, let's model this mess, while traders at home whisper, please help me stress test. It's the show where the candles dance. Volatility takes its chance. Steve says rules, Troy says math. Together they chart a hilarious path. Grab your lunch, don't be late. They'll tell you why the market's weird again. Oh, great. They're calling out levels, volatility rebels, equity drama, and index devils. One guy's calm, the other's pressing buttons fast. Is this bullish? Is this bearish? Ah, depends on the past. So tune in, laugh, and maybe learn to. These two make the chaos look almost doable for you. Every Tuesday at noon, hit that stream real quick, because markets are wild, and these two are slick.
Steve, it's been too long.
I've missed that song, and I've missed you, Troy.
I play it every night before bed. I wake my wife up to it in the night, wake her up in the morning to it. It's the perfect song. And I love watching people in real time leave the show as I'm playing that song, because they're just missing out. So, Steve, you've been a traveling man. You've been a trading man. How the heck you been this summer?
I've been good. Yeah, these vacations are kind of getting in the way of my trading. I've actually got another one that my wife is making me go on tomorrow. And then I'm done for the summer. I'm done traveling, I hope. But yeah, it's been fun.
Are you allowed to say where you're going?
Going down to Gulf Shores.
Oh, yeah.
So, right there on the border of Bama and Flowrider.
Yeah, that's right. Georgia, Florida line. Bama, Florida, Georgia. Bama, Florida.
Oh, is it Georgia?
No, it's Bama. There's a stupid country band called Georgia, Florida line.
Yeah.
So, anyway, that's how I feel about country. Well, it'll be good. It's hot in the South right now, so I'm glad I wish I knew we could just. It's too far. That's like right past where I'd drive to see you. If you were like an hour in, we could make the trip. But
gotcha.
It is what it is. Next time we'll figure it out. Steve, the summer has been a wild trading event. The trading event of the summer, as a car commercial would say. How has your trading been?
It's been difficult. Like last month, for example, I got myself in a little hole. The first 2 weeks, I'd say, I think I was down like 32,000 within the first couple weeks, and then the last couple weeks were really good, and I ended up plus 24,000 for the month. So just kind of a wild ride. Just trying to navigate the posts and tweets and volatility spikes and everything else that we deal with as traders. But as long as you can kind of come out green, I think that's what you got to do.
That's why you don't measure it a day at a time.
Right.
You kind of look back on the month at a time a lot of times. So, well, I know you've been doing a lot of stuff. We're going to look next week at your Flux tool, because you're going a little ham on the Flux tool, Steve.
I've that's kind of the reason I wanted to chat with you today about the optimizer. With the traveling and just being knee deep and kind of working on my own software, I have not had a chance to dig deep enough on the optimizer. So I'm hoping we can jump into that today and show some examples and talk about that.
Yeah, let's do it. Well, let's jump right into the optimizer. So what is the optimizer? We came out with a way basically to look at different things. And so I'm going to just go back to this losing one real quick and save this. So I'm going to save this test. This is a crappy 923, as you can tell. But we want to see if we can improve it.
9-day, 23-day double calendar. Okay, gotcha.
923, and the exit is basically random time. So in fact, I want to actually just we'll keep those. So let's run an optimization. We're going to optimize it. and we're going to look at, let's look at times. So let's do
So this would be
time.
entry times.
Yeah, entry times. Let's do 9:32 to 3:59. Let's do it like in 10-minute increments. Just don't need to get crazy. And we're gonna run
So
it
it's
year to date.
simultaneously running 39 tests at once.
Yeah, running 39 tests at once, and it's going to show you kind of if there are certain times that during the day, because that's what we're optimizing on right now.
And is there a limit on the number of tests it runs at one time, or how's that set up?
That's a great question as someone who owns the company. Up to 500 tests at once on the premium tier. I don't remember what the back testing tier is.
And that was fast.
50, yeah. So straight away, we've put some stuff in to kind of help with this, because a lot of people might look at it like, oh, we turned a loser into a winner, right? We've got a good MAR right here, a good Sortino, blah, blah, blah. Well, don't skip past this part, because this part is telling us that this parameter is actually really fragile. And this is actually pretty easy to see because you can see it visually. Like, just put your context hat on for a second. This is a 9-day 23 double calendar. Are we really going to assume that these random times during the day are better than the other non-good times during the day?
That's a good visual. So essentially, I mean, the way that I look at that, just first impression is there's more red times than there are green.
That's right. That's right. And this is not what you want to see. You want to see stability through time. And so real quick, let me go up to another one and just look.
So while you're doing that, I think I love the robustness piece, because I think the trap that all of us traders fall into with tweaking back tests is we curve fit, over optimize, and that's exactly what that piece does, I assume, right? It gives you that robustness score, 10 being the best. So it kind of gives you an idea of, is this test curve fitted or is it actually robust?
That's exactly right. And each parameter is going to look different on that. So let me share this one. This is a test that was looking at the 2013 contest we had a couple years ago, where we said, let's run a test back to 2013. Well, what's interesting is if you run this year to date, really, if you run this since dailies, it has just absolutely sucked, right?
And so is that that's just entering a $3 put, $3 call iron condor?
Yep, that's exactly right. And you manage them separately. So when the put side's -7, you get out. When the short strike is 5 points in the money, you get out. And I'm going to save this, running its crap, and we're going to optimize this. So let's do the time again. And this is a 0 day. So let's just say we're going to look at, if I could type, 9:32, 3:59 p.m. Let's do 1 minute this time. So we're going to 388 of these year to date. And we're going to see if there's any robustness to time, and this is one of the things that is helpful with this, what we put out, is basically it's now showing you at a pretty high level if a strategy has magic minute disease, or if it has strength, through the day. So this one's running 388 tests. And
well, before I forget, so we go back to it, you probably will, but so we've done a couple based on time. When we get through this, I'm interested to see what other parameters can we choose from to optimize.
Yes,
okay.
You can basically optimize on the parameters that you have set in the test.
Okay.
And I'll show you that here in a second. So we're going to let that run. Steve, I know you were in a different country a while back, beautiful Mexico. Steve,
which I found out did have internet.
That's shout out Wizzy. Shout out Wizzy.
That made me laugh out loud.
Yeah.
I think it was Wizzy posted because I said I couldn't do the show because I'm in Mexico, and he said he screenshotted a Google search that says, "Does Mexico have internet?" And then he highlighted, "Yes, Mexico has internet."
Well, it's a big country. There could be parts of it that you do that you don't. Okay, so this ran 388 tests, and it basically showed us something interesting. Now, again, the robustness is not great, but it's a lot better than it was. And what is this showing us? Well, it's showing us that, basically around lunchtime is pretty good. You get about an hour and a half where it's okay. And you get this 335, 330 range that's pretty good. So that's fine. Let's just say then we're going to take the best one. Actually, let's see what the most robust one. Let's take the most robust one, and that is the entry time, at 12:26. Why is it the most robust? Well, you can kind of tell right here. They're all kind of sitting there together.
Right.
So we're going to take this one. We're going to run it year to date. And we're going to save that and replace that crap back test. All right. Now we want to continue down the road. And you can do multiple parameters at once. And so, for instance, let's look at the short call. And let's say the base is 5 right now. Actually, let's do 0 to 15.
So this is testing if it hits the strike, which would be 0, all the way down to 15 points past the strike. Is that right?
Exactly. That's exactly right. And then this one's going to be the short put. So we're going to say 0. Let's go down to 15 again. And we're going to run that. So this time we're going to run.
Stop is -1. What does that mean? One point past that strike?
Yeah, exactly. Okay. So if you look in the background here, this other test was getting out when basically you're 7 points in the money on the put side, or 5 points in the money on the call side.
Got it.
And so we're going to run that and look at what we're doing. And so we're running 256 tests right now. And it's a game changer in this sense that it's giving you a much quicker red light, green light to continue to working on a test. That's one of the way I look at it, Steve, is you can test a strategy or an idea much faster now and then start going down deeper into stuff. So this is the call tested side. This is the put tested side.
Oh, nice.
We also have a parameter heat map of both of these. And so you could look at both of these strikes and say, okay, well, that's pretty good. That's a pretty good, the strategy looks pretty good from there. The short put has a much higher parameter impact. So the test is impacted much more by the put side than the call side, which is nice to know. And so we can also go by table here, go robust again. And let's, you could search by MAR, but this robust score basically is saying that might have a little bit of a magic minute type thing, or a magic, offset. Maybe it's better to choose something that's a little bit more robust. And so let's say you wanted to do the 4. Okay, so in that case, we're going to let the put go further in the money. We're going to get out quicker on the call side.
Okay.
And that has worked year to date pretty well, right? And you have quite a few trades year to date. Now you have to half that because the way we split them up, but 220 trades.
Mm-hmm.
And so, Steve, that's kind of the idea of it, is you can quickly come up with strategies that work and then start really going ham on them. I don't know if you have seen this as well, but we came out with an analyzation tab, which is going to show you a lot more data now about performance metrics. It's going to show you the drawdown through time, your
really nice.
top drawdown periods. A multi-year strategy is going to be useful for a heat map, things like that. we're going to give you distributions, some, max excursion stuff, and then what's very useful, lots of exit reason breakdown, you know, which makes sense. Your calls are getting put, you're going to lose money when you're getting stopped out. And then when this is interesting because basically you say like, this is a positive strategy, but if you start losing, a little bit of a win rate degradation could really push this negative. And you're going to have that with most premium selling strategies if you think about it, right?
Mm-hmm.
I mean, anytime you're making a little and losing a lot. And then, you have a position sizing calculator. This test is stupid because it's using 100% allocation, but you can see what different allocations would be.
Ooh, that's nice.
Yeah, and it'll tell you if you went bust at a certain allocation.
I love a good slider, Troy.
Love sliders, Steve. That's all I do all day. If you like sliders but don't want to slide anything, you'll love this Monte Carlo simulation. So the Monte Carlo simulation basically runs, up to 10,000 samples, and you can test this through time to see, what it would look like if we would have reshuffled the order of the losses. You could also just put other synthetically inject losses in if you wanted to see what that might look like if you lost more than the trade log shows that you lose. So you could see that. So, those two things together, the optimizer and the analyze tab, it gives you a lot more. It gives you a lot more data earlier now, right, to work with.
So let me ask you a question, just kind of off the top of your head. I know you've kind of played around with this with a lot of different strategies and a lot of different things. Yeah, obviously, market dynamics change, things change, back test strategies kind of go in and out of favor. Are you seeing a pretty decent number of tests and strategies where, let's say going back to dailies, where you're continuing to see robustness scores, let's say above 7 or 8? I mean, is there quite a bit out there, or are you finding more kind of shorter term, year to date? Obviously, you're going to find more in shorter periods, but what's your experience then?
That's a great question. I personally, the way I've started back testing now is I will run dailies as kind of like a parameter, just get my ducks in a row. But I've kind of fully bought into the idea that a strategy that lasted 4 years is going to have periods where it didn't look like a good strategy at all.
Mm-hmm.
And the reality is, I think you're probably going to change your strategy. And so I've gone to a much quicker look back window. I'm much more willing to do year to date now. Then go back, if I like the strategy, test it and just say like, well, did this just completely fall off a cliff? Is this completely like an anomaly year to date? And work that way, because anything, every year of data coming back in is the same problem like 2013. If you go back to 2013, there's very few strategies that survive.
Right.
And that's just part of it. So I don't know if I answered your question at all. Right?
Yeah, no, you did.
Yeah. But so that's kind of the name of the game. And we're working on some other stuff that's coming out. But, we're really trying to go heavy into research because we think that people need the tools to make good decisions. And that's kind of what we're doing. Steve, I know you're making tools for people to make good decisions too, which I want to look at. I mean, are you okay if we spend 10 minutes maybe just looking at Flux real quick?
Sure.
Okay. I'll let you drive. Let me stop sharing. And like the press couldn't get any hotter. Like you keep getting hot off the press releases with Flux.
I know. I was joking with my community. I haven't seen the sun in about a week, but hey, you're getting new updates on Flux, so that's good.
For those who are us, the development fans, it's like the cornballer. The thing's hot. It's a hot.
Yeah. And, my community just keeps coming out with these really good suggestions that I have to get done now.
Oh yeah. Yeah. I'm familiar with that. So yeah, if you want to share your screen.
Okay.
There it is. Oh yeah. What are we looking at, Steve? Oh my gosh.
So this is so we've got several kind of tabs at the top here. The one we're looking at here is an analyzer. So it's a kind of a full-blown trade modeling type software, which I'll talk about. The original OG Flux is and the reason it's called Flux is because I designed the calendar spread implied volatility tool to help manage my DC time machine. So sticking with the time machine, Back to the Future theme, that's where Flux came from. But this simply allows you to look at the front and back implied volatility plus the ratio between the two plus the spread between the two and get a quick snapshot of kind of where things are on an intraday, 5-day, and 20-day basis. So that was kind of the original. We also added earnings. So as stock report their quarterly earnings announcements, for example, Cisco announces tomorrow, you can pull up and get the past 5 years worth of data on every stock, showing the expected move, how often the stock exceeds the expected move, some other metrics here, some post-earnings day trading statistics so giving you some patterns to see what does the stock do the day after it announces earnings, depends on if it gaps up, gaps down, within or outside its expected move, a 20-quarter breakdown of the gaps up or down and some of the statistics around that, a visual of the gaps and closes, and the yellow dotted line is the expected move. Some other post earnings statistics, along with what did the stock do 7 days after earnings or 30 days after earnings, based on whether it went up or down.
Yeah, super useful information.
And then some other kind of general EPS data, just kind of the general data. So that's the earnings tab. I've got the NTT scanner. So one of our strategies is a directional strategy that's a trend trading strategy. So navigation trend trading is the NTT, and this scans all the opportunities on a daily basis. So you can look at buy the dips, you can look at sell the rips, and it lists out all of the the different opportunities every day. So for example, if I click on AMD, it's going to pull up the chart of the way that the NTT program works and give you the details around that. You can also filter by newer ones. So if it's a brand new buy the dip, it'll give you those, like AVGO, for example, just kind of triggered yesterday. So anyway, it's a full kind of scanner for the NTT system. And then lastly, we've got a 0DTE dashboard, which gives you the white chart as a one minute chart of SPX. You can click on these to take them off or click on them to put them back on. But we've got the intraday, kind of the dynamic expected move for the day as you go through time. And then you can compare that expected move to an average, which you can choose. So you could say, I want to compare the intraday expected move to the last 2 days, to the last 30 days, or in between that.
That's super awesome. Like, that type of stuff is so cool. And the visualizations really, I think, help people in real time look at what they're looking at, especially like that 0 day you just said. Like, comparing it to previous days is brilliant, especially for premium selling strategies.
Yeah, exactly. So you want to, like, for example, if I'm looking at a 5-day average, what's going on here? Oh, I got to click on it. That's why. So for example, here's the expected move today. Looking at it, the average over the last 5 days, you can see it was above the average early, kind of trailed down, it was below. Now it's kind of popping back up towards that average. And so, yeah, it's definitely helpful for 0DTE selling premium for sure.
Your machine, Steve.
Kind of the newest piece of it, the analyzer.
Yes.
It's just, I kind of built things that I need because I do a lot of transformers where I'm adjusting trades and things like that. So, I have first of all, I have a drop down so I can pick from, like, for example, my DC time machine. It automatically gives you 2 cards, including the double calendar and the transformer piece of it. And you can click off these, you can look at both. And then once you kind of model what you want, you can easily click on one of these buttons for TOS, Tradier, Interactive Brokers, and copy it directly to your broker, and ship the order.
That's fantastic.
So there's a bunch of other little features that, you got the Greeks, you've got the shaded 1 standard deviation move behind it, all toggle on, toggle off. You can pick the color of your choice for the graph. Anyway, a bunch of other stuff there, but yeah, it's been pretty fun building and pretty fun to have a tool that just kind of works for exactly the way that I trade.
Yeah, it's a game changer for a lot of people. I mean, because you have a bunch of different types of strategies you're doing, and so to have kind of in one place the navigation way is a really useful tool for sure. So kudos to you. Speaking of building, I have to go back to my research hut. I'm in the middle of a mind-bending thing that we're doing over here at Option Omega. So I got to roll. But Steve, welcome back. Enjoy vacation again. And we'll be back next week. I want to look more at some of that Flux stuff next week. I want to dig into some of the Transformer stuff you've been doing.
Absolutely. Look forward to it.
All right, boys and girls. We'll see you guys soon. Be safe out there. Bye-bye.
All right. See you, everybody.